Hello and welcome to Finextra. I'm Thea George and I'm here with Robert Browning of D&H. We're talking about instant payments. Robert, thank you for joining me.
Yeah, thank you very much. It's a pleasure.
So what do you think are some of the challenges banks face when it comes to taking advantage of the move to instant payments?
So I think there's quite a few challenges that the banks are facing currently. First of all, let's talk about the technology part. So this is a truly 24/7, 365 set of capabilities, and that's just not something that the banks are necessarily geared up for, right? If you look at the sort of payment landscape within the banks, that's not necessarily sort of how a lot of those operations work today. And certainly in some of the conversations that I've had with the banks, a lot of it has been around, the usual approach to a new payment rail. So how can I take my existing system, I'll make this adaptation, I'll bolt this capability on. And I think one of the things that comes out of those conversations is a fairly quick realization that this is actually something quite different. It's not just another payment rail. It's not just sort of adapting existing systems. So there's a potentially a fairly big technology job that's going to be needed for the banks to be able to properly support immediate payments. I think the second big challenge that they've got at the moment is really around the business case. So again, this concept of thinking about, this is a payment rail, it's another payment type, is potentially a little bit kind of short-sighted and immediately provides challenges in terms of putting the business case together. We live in a world of immediacy. Everything's immediate at the moment. I can go onto my Amazon app and get a delivery at the front door in an hour, right? Everything's immediate. And in the payments world, the immediacy of the payment is very quickly just going to become a hygiene factor. It's not something which the banks can necessarily generate a lot of revenue from the payment itself. And therefore, again, looking at it as just another payment rail is going to create great challenges as they try to put the business case together.
We hear a lot about the use cases, for instance, in retail payments, but what about use cases on the business-to-business side and corporate payments?
Yeah, that's right. The use cases in the retail space are kind of the fun ones that everyone likes to talk about. I go out for dinner with my friends and we split the bill kind of thing. But again, as I just mentioned, putting that business case together at the bank is a real challenge. And I think if you just focus on the retail use cases, that's just going to be very difficult because that ability to kind of split the bill at dinner is not going to generate a lot of revenue for the banks. If you look in the corporate space, though, I think this is a little bit overlooked at the moment. Obviously, a lot of immediate payment schemes initially come in with some limitations in terms of the amounts that can be paid over the scheme. But very quickly, we've seen with other examples around the world that they rapidly increase. So very quickly, you get into a situation where this could be of great value to corporations. I mean, first of all, you could just take the immediacy of the payment. I mean, I think that in and of itself is actually of more value to a corporate treasurer than it is to you or me going out for dinner. I can better manage my cash flow. I really can make very much last-minute decisions around payments. But then beyond that, you start to look at some of the value-added services. So again, you think about a capability like request for payment. And again, the example, the use case that is given is around, I order something online, it gets delivered to my house, I get a request for payment, I pay, and then I can receive the goods. But I think, in fact, that is better applied in the corporate space. So if you think about the remittance details that you can embed within the request for payment, the problems that you solve for the corporate treasurers in terms of reconciliation, the potential there is huge. So the banks should really be looking at this, I think, in the corporate space when they're trying to build the business case, talking to the corporate treasurers at their customers, and really trying to understand what their current pain points are. And I think there's a great opportunity there for them to deliver some real value-added services to the corporate treasurers that can really kind of help them, and something that will save the corporation money, and therefore that corporation will be more willing to pay for that service.
So what then are some of the principles banks can adhere to avoid the pitfalls and make sure they get all the benefits of the move to instant?
The first thing that I would say is I think banks need to be thinking about this on a more sort of medium to long-term basis. So as I said originally, if you think about this as just another payment rail, you're really missing out on what are maybe the more medium-term kind of opportunities. The business case may not look great when you first set this up. The volumes won't be huge. There'll be a limited number of value-added services, but you've got to sort of think about the medium long term when you're thinking about how you're going to solve this problem. You think about the technology that you put in. It's got to be able to support the richness of the data, the ISO 20022 formats that nearly all of the immediate payment schemes use around the world. It's got to be able to support obviously the real-time capabilities, that true 24/7. Gone are the days where 99.9 or 99.99, whatever it is acceptable. These need to be truly 100% available solutions. And in my mind, the banks, they could start small, but they really need to think about implementing new technology and new capabilities in the bank to make sure that they really are ready for the future. It will also, in my mind, allow them to truly innovate. If they're just trying to adapt existing systems, it's going to make it very difficult to drive the real value out of immediate payments and deliver those value-added services and those innovative capabilities that they will be able to offer, as we said, particularly to corporate customers, but also in the retail space as well. And then the final thing is there's so much going on at the moment. I think it's a challenge for banks because there's a lot of focus around PSD2 and open banking initiatives. That's obviously regulatory, so it takes a priority in terms of the resources at the bank. But equally, I think when they look at how they're going to implement immediate payments, they've got to be careful not to think of it in isolation again. The overlap and the interaction between open banking, PSD2, immediate payments and other initiatives that are going on in the industry at the moment, that the interaction and the synergy there is potentially enormous, and it's important to look at that as broadly as possible and not get too narrowly focused, as I said, on just thinking this is just another payment rail to implement.
Robert, thank you for joining me.
Thank you very much.
And thank you for watching.